Guys, the Japanese stock market has crashed. It is over. If you are an international investor, what more proof do you need that you're a clown and that you should only buy U.S. stocks, bro? Because U.S. stocks, bro, always crash less than international stocks, bro. Japan's a perfect example. Well, you're actually freaking wrong, you freaking clowns. Welcome back to Strongman Personal Finance. We got to talk about currency. So if you look at the Japanese stock market, okay, you Google Nikkei 225 or whatever. That's like I guess the top 225 stocks in the country. You look at that, or you look at like a hedged ETF, which means they hedge it with dollars, so it prevents issues with currency. You'll see that Japanese stocks are down massively, like 10, 12%. It's freaking crazy, right? Well, that's because they're measured. That index or that metric you're looking at, that performance you're looking at, is in USD. Because one thing that affects returns is currency. That's right. The US dollar has sharply weakened versus the yen in the last couple of days, months, whatever. And that change, when you measure returns in Japan in USD and the dollar suddenly weakens, it compounds the loss that you see because it's reflecting currency losses on top of stock market losses. But if you go look at Japan, the stock market as measured in yen, guess what? It's only down it's still down a little bit, just like U.S. stocks, but it's not as down as much as you might possibly think. The Japanese stock market has not crashed. The Japanese stock market has crashed in dollar terms. And if you're exposed to the Japanese stock market via Japanese currency, you're fine. Oh, I wonder what ETF doesn't hedge currency. Oh, VT, that's right. What you just witnessed is the effect of not having currency diversification, okay? The beauty of VT is that you have global diversification and you have global currency diversification, because changes in currencies and exchange rates can have outsized effects on your stock market returns. And if you're only in U.S. currency and that currency starts to really devalue, remember the U.S. currency has been very strong. There's been a lot of demand for dollars because of fear. People are scared. They go buy dollars and they sell foreign currencies, basically. But if that trend reverses, guess what? Your returns as measured in U.S. dollars may not be as good, okay? So if you go look at VT or VXUS right now, they're not down that much. Even though Japan, it's the largest holding in VXUS, because VXUS is just international stocks. And then Japan is, I think it's the second largest holding, it has to be, second largest country in VT. That's also not down that much because you're not hedged, okay? So stop freaking out about Japanese stocks. Don't let this scare you away from international investing, okay? Because currency benefits that can help the U.S. now, that have helped U.S. stocks, bro, could also reverse. You can make or lose even more money if you don't diversify over multiple currencies. It's crazy how that works. How many of you predicted this? Not many, okay? And even if you did predict this, you didn't get the timing right, okay? This is guy named Michael Guyed. Oh, I'm such a genius. He was calling the carry trade risk pro. And of course he was wrong because his timing was wrong, but whatever. That's not the point of this video. I'll make another video about that. But stay globally diversified, unhedged, okay? Own everything and diversify yourself with currency. Nobody can predict when this crap is gonna happen, okay? Nobody can predict the future. This is proof. This is not difficult, ladies and gentlemen. Japanese stocks did not crash. U.S. stocks are not just the best ever, okay? You gotta understand what you're doing, why you're doing it, and when you understand what's going on, you're not gonna freak out like these other clowns, okay? Stay the course. Most of you, if U.S. stocks, especially if there's currency effects going into the future, most of you will abandon U.S. stocks at some point in the future if we have a correction that gets even more amplified by currency. Or if you see international stocks starting to do better because of changes in currency strengths, you're going to start piling in international stocks. Okay, I know exactly what you clowns are going to do. So I just wanted to put that out there. You're fine. I'm still sticking with VT. I'm buying it every single 2 weeks. Whenever I spare cash, I chuck it in. I don't really have any spare cash anymore. I kind of I got some extra cash from doing Army stuff, and then I basically just invested all that. US Expo. I bought VT. Just keep dollar cost averaging into VT every 2 weeks. This is immaterial. This is just a rapid change in currency exchange rates that's really affecting this. Even if we do enter a recession, which is not guaranteed, it ain't the end of the world. Recessions happen. Keep dollar cost averaging over 30 years and you'll be fine, okay? Stock market geniuses. I know you guys understand the global economy. I know you guys understand exchange rates. You can predict every single freaking exchange rate. Y'all are freaking stock picking geniuses, right? No, you're a bunch of clowns. Talk to you later. Cheers.